Yeah, hi friends, it's Harpreet Singh from Shareholder Law Firm. Today I want to talk about corporations. As you have heard, and I think most of the business owners use corporations for one and only one purpose, just to have that personal liability protection. So if something gets wrong, either an accident or any kind of legal dispute, so you think that you will get that protection, and you will get that protection, but if you follow the formalities. So today I want to talk about mostly the structure and the documents involved in a corporation, because if you like to know more about what's the consequences of not following the formalities, there is another video I made previously. So it talks about piercing the corporate veil, that your protection, so-called protection, the court can set that aside based on your activities and also not following the formalities. So let's talk about the structure of corporation. So if I can give you, I think, a good example, a corporation, and I think I will name it, one of the roles is the shareholders. So shareholders are basically the persons who have the ownership. So they are basically an owner in a layman's term. So there can be like number of shareholders. Big corporations have like hundreds and thousands of these. And small business owners, probably they only have like husband and wife, or maybe a kid, or maybe two brothers are owning a business. There can be like maybe 4 or 5 other business owner, but mostly involving family. So the number of shareholders are less. So you get, I think, that big pie of ownership out of it. So the role is the board of directors. And I will just give you an analogy. The board of directors are similar to your legislatures, like your assembly members. So those are your rule makers. So basically their role is to make those rules how this corporation will operate their business. And if you then go to the next level, then you will encounter the officers, your president, vice president, your treasurer, secretary, or there can be other officers which are called as sub-officers. You have directors for a different department. You have your IT guys, your CTOs, your COOs, CFOs. So all those people, they don't make rules. They just follow the rules. So basically you can think, if we have to take example of the government structure, so instead of legislature, they are your governor. They are your secretary of state or human resources. So those people cannot themselves make the basic rules. But in the government structure, obviously they have some discretion how to enforce laws and all those kind of things. Still, you can also think about that example when you're talking about the corporation. So these are the basic roles in the corporation. So the fundamental decisions, if suppose your corporation is selling some significant asset, like 30% of some business, and that's a significant amount, because if it amounts to 100% of your assets, then 30% is substantial amount. In that situation, you need to bring in shareholders to make those decisions. But usually the day-to-day decisions about the policy, it's taken by the board of directors. And the board of directors also make sure, okay, what would be our principal place of business, where we will be doing our accounting and our banking, and what would be our, if you think about the accounting, what would be our method of providing the information to IRS in terms of it would be accrual or on cash basis. So these are like different kind of things which board of director does, but their main purpose is to create those policies where these officers then come into place to follow those policies. So if suppose you have a vacancy for one of the board of directors, then the shareholder usually doesn't fill those vacancies, but you can structure your corporation as you like. You can have an election based system where your shareholders means can vote for certain candidates which your board of directors have nominated, and then again that system of governance that you have those elections and these people. So if you think about big corporations, they have like kind of real election which we usually think about in our electoral politics. So it get very interesting, like who is backing whom, so that politics, I think craziness get involved in that situation if you have a big corporation. But usually if you're a small business, most of the time you are not, probably you will not see anything like that. But you never know, means if there are difference of opinion among yourself, you have like 10 board of director and someone just like to see that this corporation or business should move in with certain ideas or ideology, and you want to approach certain customers and others don't feel that, then there comes the component of providing a place to those kind of people, those can think about those similar ideas. So you can have the elections, or you can have the board of director themselves appoint someone as another board of director. So you can have also that system. So I am talking about the for-profit system, a for-profit corporation, because a non-profit corporation is also a corporation. But the rules of non-profit, it's a little bit different. We will discuss about those in some other video. But I am talking about a for-profit corporation. So you can, I think, provide the mechanism how the board of directors will select or appoint a particular member, or maybe even a shareholder, or maybe an outside person, because the board of director doesn't need to be a shareholder, and it's vice versa. And also on the other side, if you have your officers, they don't need to be a board of director or shareholder. So because when you have like more people, then you will understand that it's always good to bring the expertise of different people in, especially to place them as your directors, because they are discussing the policy, how our corporation should handle a particular situation, or how we can grow our business based on this particular market with certain new ideas from different directors. Someone can be a finance expert. Someone can be very good at approaching certain communities for businesses. So you can have those expertise in. So just don't think that if you are that you cannot bring other people into your business because you don't want to give that ownership part. You don't have to give that ownership to those people. You can have those advisors in without even the ownership. Obviously, the things comes about the confidentiality. So in general, like every board of directors, and we have discussed that in previous videos, that they have certain duties. Means even if they are not get paid, that doesn't mean they will breach those duties required by law. Either it's fiduciary duty or its duty to maintain confidentiality, not to compete, or conflict of interest rules. So all those rules will apply. So you can think about, you can bring other people in even without giving the ownership and get the benefit of that expertise. And same thing with your officers. You can have like a totally different person who is not even the owner of the business to run the day-to-day operation of your business. And sometimes people hire management companies for certain businesses to run. They just give this company the control for day-to-day operation, because if suppose you have like 10 businesses and you are not able to manage, you cannot be at 10 places every time. So certain people use management companies to get benefit of them and appoint them as the officers. And again, you have to think what's the benefit for you in this. It's the expertise of the other people without giving the ownership. Again, you can have the expertise in-house. You can have one of your family member who is really good at certain things. He can do that thing without even getting the ownership of it. You can have that person on salary or based on their work. If they qualify as an independent contractor under the law, you can have that relationship, because even in like different industry, there are people working on independent contractor relationship because their specific work is very limited. They are not stuck at this only hired work, so they can move along, and there is less chances that they would be able to qualify as an employee. So this is the structure about the corporation. Let's look at the documents which are required for this corporation. In terms of documents, the corporation, the main document, and you can again follow the analogy of government. The main document for any government is the constitution of that place. So the constitution of a corporation is Article of Incorporation. It's a very broad document, you can say. It's usually not specific, but you can write anything basically about the purpose of a corporation. But it's always good to make it broad, that whatever is allowed by law, we can do that kind of a business. So in future, you don't have to get those amendments in, go through that whole process, get it approved through board of directors, shareholders. So that's your main constitution which you have to follow. It will provide you how many number of shares this corporation is eligible to provide to the shareholders. So it would provide that maximum amount, and it would provide the basic information about who would be your agent for service of process. That means which entity or person would be able to get the service of the legal documents. Sometime if your corporation is sued, then that summons you are served on this particular person you designate as agent for service of process. So those kind of basic things are included in Article of Incorporation, and it's a very, I think, important document, because it's required for anything you have to do for a corporation. Open bank account, business loan, business license, because the other people or entities want to know that you are a legitimate corporation, and the only document which will tell that, it's the filed document with Secretary of State. So it needs to be filed, otherwise you have not basically created any entity yet. So the people who create those entities are called incorporators. So these are basically the owners initially, if you're talking about like small businesses. So the owners are basically incorporators, and or you can hire any third person, like your lawyers, CPAs does that. So you can hire, have any kind of person. Basically, incorporator is that they are providing these documents to Secretary of State office to be filed and and get it registered. So that's the first main document. The second main document is your bylaws. Your bylaws are basically, again, going to that governance analogy. It's your laws. You're basically as the California had number of codes, either civil code, civil procedure, or you have business and profession code, or other different codes. So these are your codes. These are the rules which provide you more details in addition to the Article of Incorporation, how you will conduct your business, what are your limitations, what you will do, And it will also discuss about the rules of the meetings, because you need to have meetings. In corporation, that's one of the, at least you need to have like an annual meeting for your corporation every year. That's the legal requirement. If you don't follow that, then as we have discussed in one of the videos about piercing the corporate veil, someone can argue that you should not get the protection of a corporation because you are not following these formalities and it's a sham corporation. So you need to follow those formalities, and it's also good practice because if you are a number of owners, it's also good to sit together in a month and just discuss about what happened, where you are as a business, what's going to happen in future, what are your plans, and how you will grow your business. So it's always good talk about the happenings which are ongoing in your business, either employment issues or acquisition of some other asset, or just looking around what's in your bank account and what are your expenses, how you can reduce those. So it's always good practice to do that, and the minimum requirement is you need to have an annual meeting. But I recommend that you should have at least like one meeting at least a quarter, and it depends on your business. If your business is much more active, then you should have monthly meetings. So those are the rules for the meetings, which would be usually in your bylaws. And then what are the powers of the directors, how they will appoint it, and who will appoint them, their vacancies, termination, and same thing for the officer, what would be their power. So this document called bylaws, it will provide you those basic rules how to run those corporations. Then comes your meeting resolutions. So your minutes, which are usually called. So your minutes are basically whenever you have a meeting of board of directors, whatever happened in that meeting, you discussed, you decided who voted for what. The minutes of your meetings are basically just kind of a written record. It's just you are creating that paper trail to again refer back to if suppose there is some kind of dispute, okay, what we have agreed to. So it just creates that paper trail which you can refer back to. And also these are the things which are required by law, and also the lenders would require it, because initially when you are creating the corporation, you would need those initial meeting minutes, talk about that you are adopted today with majority of votes of the shareholder, this bylaws, and you have appointed so and so directors, and these directors will have so and so powers, and also which would be your bank account. You are authorizing these directors to open a bank account, and also what would be your principal place of business. So these are like basic things which you initially have to decide, and things like opening a PO box if you need it. So what would be your who would be your officers if you want to decide in your initial meeting. So you will create a record, what happened, what was approved, and you will keep in your binder. It's always good to create binders because you will stack up all these documents in future in that single binder, then you can just go and refer it. So these are the key documents for a corporation. Again, remember, you need to follow these formalities if you want to get the benefit of a corporation protection. Otherwise, you are always vulnerable to piercing the corporate veil issues, because again, we have discussed in previous videos, because the state want to provide you that protection, but you need to do some work on that. So again, thanks for watching these videos, and see you with next videos. Thank you.